If B isn't complete, then once it is, we'll short it to capture significant profits from the downturn. The total profit was approximately $81,910, which, when converted at the current exchange rate, amounts to roughly 120 million won. 5 things every trader must do and 5 things they must never do. Will you trust this and give it a try? Last time it was the Bitcoin summit, right? President Trump. Last week, when it was announced that policies related to Bitcoin were going to be unveiled, there was a lot of anticipation. Did the market catch on? I wondered if someone might already know something, but there was absolutely no content. They stated that Bitcoin would be used as a strategic reserve asset, meaning that the Bitcoin, which had been confiscated due to its illicit use, would be held in the treasury rather than being sold off. So it wasn't about making additional purchases. They would simply hold on to what they already had. Apart from that, there wasn't much else of significance. I wondered if perhaps prices might go up. I left the possibility open, but as expected, the outcome was predetermined. From here to here was the first wave. It was inevitable that a correction would follow. So that was essentially what we covered in the previous broadcast. I was convinced this was an impulse move, absolutely certain it was. So if it rallied one more time from here, let's short it. It was expected to drop by this much, setting our profit target accordingly. I speculated that if a highly crypto-friendly policy announcement triggered an impulse move, since we'd witnessed a strong impulse from the 1, 2, 3, 4, 5 lows, and then, after an ABC correction, the price would break its previous high once again, then perhaps it might rally. I was looking forward to the Bitcoin summit with that hope, but lo and behold, the chart had already revealed the answer before the summit even began. For those who've been watching my broadcasts for a long time, you know it never ceases to amaze me. The conditions were extremely favorable at that time. Then it became time for the drop. So, according to the chart analysis, this was the peak. I had determined that the price should fall, yet the market offered no clear clue for a decline. But then, compelling evidence emerged. So what happened here? The Bybit hacking incident. Because tariffs are expected to drive up prices, the base rate cuts will be smaller than we anticipated. What does that mean? It means money isn't flowing into the market, and without money flowing, there's little buying interest in Bitcoin, right? As optimism waned, prices started to drop, yet when it's time for a rise, Bitcoin slowly creeps up as various positive catalysts kick in. When it's time to fall, it declines gradually until a sudden wave of negative news triggers a sharp correction. It's truly remarkable. That pattern is always consistent. To summarize the market situation, after rising from a low of around $15,000 in 2022 to $110,000 in January 2025, the market is now in a correction phase. The 0.5 retracement level seems to be the most significant demand, so it might not drop further until it approaches the $60,000 level. If market conditions are really dire, it could even reach the 0.382 level, but we'll consider that later. So I believe that if we wait a bit longer, a further decline may occur. That's my view, and honestly, there isn't much to be overly concerned about regarding the drop from the peak. Initially, it declined in an ABC pattern, right? Wave A occurred, followed by a rebound forming wave B, and then it dropped again in an ABC pattern, leading to wave C. Until the last broadcast, I had some expectations for an impulse move. In the end, it rebounded to the 0.5 level, but then failed to hold. It may or may not have bounced as expected, but typically when it reaches that level, it's considered a valid rebound. So it might continue to fall just as it is. Alternatively, if B isn't complete, then it would go like this. So A, ABC again, and now B is out, right? Then wave C should follow. Nonetheless, I believe it will drop again. Expect it to fall like this. So if there's a difference, it would be whether it reaches up to this line, which is around 60,000, or if it will fall after a rebound. I think there will be a bit of a difference, but it remains to be seen. If the rebound reaches this level, it would present an excellent shorting opportunity. If B isn't complete, then once it is, we'll short it to capture significant profits from the decline. But if it just continues to fall, there aren't many attractive entry points right now. About reviewing the trades, there's nothing significant to say. The first trade from the last broadcast was executed right here. What was my decision here? I don't know if this drop from the peak is an impulse. It's confusing. I'm confused, but let's assume this. So how can we count the waves? I always tell you to watch the trend, right? Here we see sharp drops, rebounds, and drops again. In my view, that forms one complete trend. Since it was the sharpest and longest, it must be the third wave. Let's assume that and try to count. It comes out as a 1, 2, 3, 4, 5 sequence. That's wave 3, correct? What's the previous downward wave? They would represent the first and second waves preceding the third, fourth, and fifth waves. However, it's unclear if this qualifies as an impulse move. Because of that, this doesn't really seem like the impulse of the first wave. So it might be an impulse or it might not be. If it is, then it's a 5-wave move. That means by the count, a decline should follow the rebound. If this isn't an impulse but rather an ABC correction, a rebound is still expected. Whether it's a downward impulse or an ABC correction, it's confusing, but a rebound is inevitable. So I entered a long position here, anticipating that even if it were an impulse, it would bounce back to the 0.382 level before dropping. I set a take profit order at that level, expecting a rebound followed by a decline. When I woke up the next day, all my take profit orders had been executed. And the next trade I made was probably right around here, and it was a very short-term trade. I think I managed to take a small profit here, and then the next stop loss was set here. I thought this was the end of the trend, so I decided to short the position here. In hindsight, it wasn't a bad entry point, but I had expected that this would be the final wave, so as soon as the price passed that level, I immediately set a stop loss. So my stop loss was triggered exactly, and then it fell sharply. So I traded like that, but the profit wasn't much. Earlier, my long entry was executed here. Then I executed a short-term short here and I got stop loss, something like that. Then I secured another small profit. Then I shorted here and got stopped out. Overall, it wasn't much. The total profit was about $81,910, which, when converted at the current exchange rate, is roughly 120 million won. Recently, I haven't talked much about the economy. It's been a while since I reviewed the S&P 500 and Nasdaq charts. But why do they look so pessimistic? Back in the days without the internet, there was a surge in the late 1990s driven by sky-high expectations for the internet. By the year 2000, when it was considered an enormous bubble and completely burst that marked waves 1 and 2, and I'm not entirely sure how you'd count it, but to me it appears as a third wave move, like a 1, 2, 3, 4, 5 sequence. So that was the third wave, that was the first wave, then this must be the fifth wave. Then it's a 1, 2, 3, 4, 5 sequence. Since this major upward cycle is over, a correction is inevitable and it's expected to be the largest correction ever witnessed, unless the fifth wave extends. So if the Nasdaq drops this much, the entire market will crash. The S&P 500 and overall economic conditions are in a similar state. It's becoming increasingly worrisome. I'm not sure if the entire 5-wave sequence has been completed yet. During the COVID-19 period, when liquidity was abundant, the market soared, only to plummet as interest rate hikes were announced. Then the low point was reached. From here, I think the final 5th wave has begun. We're almost there. I really hope my analysis is wrong. Sent a super chat saying, "Dear Mr. Million, I've been watching your videos for 20 years. Has your trading style changed significantly compared to 5 years ago? Back then my seed money was much smaller. So I took on far more risk and traded aggressively for high returns, which led to extremely high profit rates. At the moment, my profit rate is very low. Instead, I trade in a way that consistently generates profits. So, as you watch my videos, you might notice that I've experienced both bull and bear markets. And as my capital grew, my trading approach evolved accordingly. You think, I need to earn as much as that guy or even outperform him. When you see my performance, you might resolve, when I start making money, I should switch to a more risk-averse method that stabilizes profits, just like him. Use my example as a lesson. Some might say, if I were making hundreds of millions or billions, I'd be aggressively raking in trillions, while others might find my approach too conservative. Viewer Geyumsa sent a super chat. I'm a viewer who's been with you for 4 years. While Bitcoin continues to trend downward, why did you opt to buy Trump coin in installments? I think it's going down, so I buy in installments. I highly recommend the book Turtle Trading. Check it out. It explains trend following, which most successful investors use. I do counter trend trading. I'm the unusual one. Originally, the market's correct approach is trend following. So that was the question. Sorry, Gumsa, my apologies. Wouldn't it be better to buy when Bitcoin hits its low? Anyway, if you expect Bitcoin to drop, then Trump coin will drop even more. So why not buy then? The first time I considered buying in installments was when Bitcoin was around this point. It was when I sold 75% of my entire coin and held on to 25%. But I believe there was a chance for a rally. So I made my initial purchase with just a very small allocation, but since it was just a minor trial allocation, I only committed 1/10. This is how to buy. In Bitcoin terms, it's like buying in 10 equal parts to average down. If Bitcoin rises, Trump coin should follow suit. That's the idea. As I always say, I've never gone 100% all in. 5 things every trader must do and 5 things they must never do. Will you trust this and give it a try? I truly have been like this. First, always maintain a clean desk. Second, take a shower and refresh yourself. One is your environment, another is your body, and the last is your mind. So I tidy up my desk, freshen up, and then sit down. First, when I sit at my desk, I feel great. And finally, I clean and organize my body with reverence. What that means is you internally resolve, today I will focus and analyze thoroughly. You make that commitment to yourself. And you set your mind in a disciplined manner, deciding not to be swayed by temptations and to avoid using high leverage. If you follow this, then good entry points will eventually come. But just pass on it for now. Then when the time is right, execute your trade. Just do it exactly like this. This way, you'll make money. Everyone, try this routine. It truly works. I don't like discussing unscientific methods. My personality is shaped by studying science and engineering. I used to be an engineer. Here are 5 things you must do and 5 things you must not do. If you do the opposite, always keep your desk dirty. Don't shower before trading. Rushing into trading without tidying up and without doing any chart analysis. Then you immediately jump in and buy. If you're wrong, cut your losses. That's exactly the opposite of the 5 must-dos. Some of you might be like this. Your desk is messy, and after coming home from work, even if you're a bit sticky and tired, you barely freshen up, sit down in a hurry to check the charts, impulsively buy when you think an opportunity has come, and then get stopped out. Many people probably do this. It's all too obvious. You really shouldn't do that. Got it?